into context for us, given all of the negative notes we've been seeing about Apple so far. And then this from Munster today, saying he thinks Apple shares are going to increase 50% just because of the next iPhone.
Yeah, this is sort of this whipsaw effect that we've been getting with about Apple lately, and there's a lot of volatility around the stock lately because people are waiting to see what the company's going to do next. There's been a lot of reports coming out of its supply chain saying that there's weakness with the iPhone, and then other people like Gene Munster who are saying that some of these concerns are overstated and that this is kind of a cyclical dip that the company typically sees this time of year, and that it will pick back up in the fall when new products roll out.
So, Paul, Munster's bullish on Apple. Other analysts, not so much. How about you?
I think I just lost you.
All right. While we get that fixed, Adam, talk to us a little bit about, how this then plays out for Apple this year. Obviously, we're expecting the iPhone 7 sometime in September, but what happens between now and then?
Yeah, this is a critical stretch for Apple. I mean, last year they made a lot of hay about the new products that are going to be coming out. They had the new watch that came out, the Apple Music, and a bigger iPad that came out. Essentially having this new ensemble around the iPhone that was going to help complement that product. But a lot of those aren't performing as well. I mean, the music product is kind of an ancillary service. Apple Watch is still a sort of muted success, and the iPad continues to fall. So everything really hinges on the iPhone. And so this is at a period when the company typically sees its sales dip, and the next model, what new features are released, will go a long way to determining how investors feel about the company.
Now let's talk about this $1 billion that Google reportedly paid to Apple in 2014 to keep its search bar on the iPhone. This is something that our legal reporter, Joel Rosenblatt, dug out of a court transcript from Oracle suing Google, so something unrelated. Explain what this $1 billion number means.
So when you go on your iPhone and you open up the web browser Safari, on there is when you search for something, say you're searching for certain kind of shoes or a restaurant or something like that, it goes through Google. And so to Google pays Apple, what Google pays Apple has been a big secret. It's known that they do pay to be the service there. But what hasn't been known. And so now this information came out in court filings, and there was a big stink about it. Google and Apple both tried to have this information redacted from the court records, and then it was pulled.
Yeah, it suddenly disappeared. It's not there anymore. Now, we talked to Gene Munster about this today as well because, as you said, rumors have been swirling for a long time about how much Google actually pays Apple for this service. Take a listen to what Munster had to say.
It sounds like a big number, but when you look in the context, they probably generated about $3 billion in revenue from that. What that implies is what we'd call a 30% TAC or 33% TAC. That's a traffic acquisition cost that Google paid. That's more than a typical traffic acquisition cost that Google would pay, but less than what had been rumored. It had rumored to be 50%. So in some ways, that $1 billion, if you're going to ask me to guess before I saw the number, I would have guessed it was closer to $1.5 billion.
Now, Paul, obviously Apple and Google are also fierce competitors in hardware. At what point does Apple say, we don't need your $1 billion?
I hope never, for their sake. That's a big chunk of change to have to give up on. I mean, the history of this shows, look backwards and look at companies like Mozilla, for example. I mean, Mozilla really became sort of a lifeline, keeping that company alive in many ways, the sort of the search payments back. So, these things tend not to go away and may shrink in scale, but it's not going to go away, I don't think, anytime in the future. I think, as a matter of fact, it's an important line to sort of stay tapped into.
And Paul, more broadly on Apple, the question I posed to you earlier, Gene Munster is bullish. Right. Gene Munster is bullish on Apple, but a lot of other analysts not so much. How do you think, as a former equities analyst, how do you think Apple's story plays out this year?
Did Gene stop being bullish at any point? I just feel I should check in on that. My sense is he didn't. So yeah. So the stock did decline and is still down. And no fault against Gene. I'm sure he'd make a lovely son. I'm still very concerned about Apple in the current calendar and fiscal year. I think you're going to see negative year-over-year comparables in terms of unit decline. on the iPhone product. I think iPhone 7, it's very difficult to see how that's the kind of blockbuster upgrade that we saw on the 6. This is just going to be sort of a mutation on the product from everything we hear, not a huge change. And then further, of course, so much of the growth has been coming from Asian markets. We're all seeing what's happening in terms of, the recession and sort of really broad economic decline in those markets. So I don't see a really strong reason to be optimistic. I don't see what supports the stock at higher levels.
Beyond the iPhone, Adam, what is going to be the next most significant product for Apple?
Well, they're focusing on the near term. The big thing that they try and focus on are some of these services like Apple Pay or Apple Music, but those are really incremental. I was talking to another analyst earlier, and he's saying that for an iPhone, Apple gets about $300 in profit from an iPhone. To get even $100 from Apple Pay requires like 60,000 transactions. And so you're talking about these services just require so much volume to add up to the sort of things to make up for any sort of decline in the iPhone that it is a challenging comparison.